On January 28, 2025, reports emerged indicating that the Trump administration is contemplating the appointment of Kyle Bass, a prominent hedge fund manager, to a key advisory position within either the Treasury or Defense Department. This consideration has ignited discussions regarding the potential impact on U.S. China relations given Bass's history of criticism toward China and his investment strategies that frequently target the Chinese market. Kyle Bass, a brief background. Kyle Bass is best known as the founder of Heyman Capital Management, a hedge fund that gained notoriety for its successful bet against subprime mortgages during the 2008 financial crisis. His investment philosophy is characterized by a focus on shorting stocks he perceives as overvalued, particularly in the context of the Chinese economy. Bass has been vocal about the opacity and regulatory challenges associated with Chinese companies, arguing that these factors pose significant risks to investors. Potential role and strategic influence. The potential appointment of Bass could represent a shift toward a more aggressive economic policy regarding China. Sources suggest that his deep understanding of financial markets and geopolitical risks could provide the Trump administration with valuable insights as it navigates complex tensions with Beijing. Bass has previously pushed for stringent measures against China, advocating for restrictions on U.S. investments in Chinese firms and raising alarms about the economic practices employed by the Chinese government. Reactions and concerns. The discussions surrounding Bass's potential role have elicited mixed reactions. Proponents argue that his appointment could lead to a firmer U.S. stance on China, which many believe is necessary given the ongoing trade disputes, technology restrictions, and military tensions in regions like the South China Sea. They contend that Bass's expertise could help formulate strategies to counteract what they view as aggressive Chinese policies. Conversely, critics express apprehension that a confrontational approach could exacerbate existing tensions, leading to retaliatory actions from China that might destabilize global markets and negatively impact U.S. businesses operating within China. There are concerns that an escalation in rhetoric and policy could undermine diplomatic relations and diminish prospects for cooperation on global issues. Context of U.S. China relations. The deliberations regarding Bass's potential appointment occur against a backdrop of rising tensions between the U.S. and China. In recent years, the two countries have engaged in a series of disputes encompassing trade policies, technology bans, and military posturing. Lawmakers in the U.S. have increasingly raised national security concerns regarding Chinese investments and their implications for American interests. Summary of sources. The implications of Bass's possible appointment have been covered by various sources, each providing unique angles. 1. Bloomberg emphasizes Bass's financial expertise and the likelihood of a more assertive U.S. economic policy towards China. 2. Yahoo Finance focuses on the geopolitical ramifications of such an appointment and the public's response to the potential shift in policy. 3. Investing.com delves into Bass's investment strategies, linking them to his critical stance on the Chinese economy. In conclusion, the Trump administration's consideration of Kyle Bass for a significant advisory role highlights a potential shift towards a more aggressive posture in U.S.-China relations. While this move may resonate with those advocating for a tougher stance on China, it also raises concerns about the broader implications for international diplomacy and economic stability. As discussions progress, the administration will need to balance these considerations carefully to navigate the intricate landscape of U.S.-China relations effectively. The potential appointment of Kyle Bass as a key advisor in either the Treasury or Defense Department highlights a significant shift in U.S. policy towards China, which is not merely a continuation of previous strategies but a potential escalation of hostilities. This situation presents several counterintuitive elements that warrant further exploration. 1. Investment strategies versus political roles. Typically, one might expect that a hedge fund veteran focused on financial markets would prioritize economic stability and growth. However, Bass's investment strategies, which often involve shorting Chinese companies, contradict this expectation. His appointment could lead to a more aggressive U.S. stance that favors economic confrontation over diplomatic engagement. This raises the question of whether a financial expert whose strategies thrive on market volatility is the right fit for a position that traditionally values economic stability and cooperation. 2. Criticism of China as a unifying factor. While one might assume that criticism of China would lead to a polarized political environment, Base's potential appointment could serve as a unifying factor among certain factions in the U.S. government. In a landscape where bipartisan cooperation is often elusive, a hardline approach towards China as advocated by Base might actually bridge divides among lawmakers who are increasingly anxious about China's global influence. This realization complicates the conventional view of partisan politics, suggesting that external threats can sometimes create unexpected alliances. 3. Global economic impact versus domestic political gain. The prevailing narrative suggests that a hardline approach towards China could destabilize global markets, impacting U.S. businesses operating in China. However, the counterintuitive aspect lies in the potential political gain for the Trump administration. By adopting a confrontational stance, the administration could rally support from nationalist factions and those concerned about national security, even if it risks economic repercussions. This dynamic illustrates a disconnection between political strategy and economic wisdom, emphasizing the complexities of governance where short-term political gains may outweigh long-term economic considerations. For expertise in financial markets versus geopolitical strategy, it is commonly accepted that expertise in financial markets does not necessarily translate to effective geopolitical strategy. Base's background in hedge fund management might lead one to assume he possesses insights that could be beneficial in shaping economic policy. However, geopolitical relations often require nuanced understandings of diplomacy, culture, and history, areas where a financial expert may lack depth. This disparity raises questions about the appropriateness of appointing individuals from purely financial backgrounds to roles that significantly impact international relations. 5. Potential for retaliation versus economic independence. Critics of Base's potential appointment warn of possible retaliatory measures from China which could further escalate tensions. However, this perspective overlooks the possibility that maintaining a confrontational approach could accelerate U.S. efforts toward economic independence from China. By limiting investments and imposing stricter regulations, the U.S. may ultimately foster domestic industries and reduce reliance on Chinese markets. This outcome underscores the paradox of confrontation. A more aggressive policy could in the long run enhance U.S. economic resilience even if it initially invites retaliation. 6. Public perception of China. The narrative surrounding China in U.S. politics is often framed as a binary choice: cooperation or confrontation. Yet Base's critical stance on China might resonate with a broader public sentiment that is increasingly skeptical of Chinese intentions. This counterintuitive alignment suggests that an aggressive policy could gain public support despite risks to diplomatic relations. It reveals a nuanced landscape where public opinion can shift dramatically based on perceived threats, complicating the assumptions about public resistance to hardline policies. 7. Long-term strategy versus immediate gains. The appointment of Base could be interpreted as a short-term tactic to solidify a specific political agenda or to respond to immediate concerns regarding China's influence. However, this approach may neglect the long-term strategies necessary for sustainable U.S. interests. The counterintuitive implication here is that immediate political gains could come at the expense of long-term stability, suggesting that the administration might prioritize short-term objectives over comprehensive strategies that address the evolving nature of U.S.-China relations. In conclusion, the consideration of Kyle Base for a significant advisory role within the Trump administration reveals several counterintuitive dynamics regarding U.S.-China relations. These include the complex interplay between financial strategies and geopolitical considerations, the potential for unexpected political alliances, and the intricate balance between immediate political gains and long-term economic stability. Such nuances challenge conventional wisdom about the implications of appointing a hedge fund veteran to a pivotal government role and underscore the multifaceted nature of international relations in an increasingly polarized global landscape. The potential appointment of Kyle Bass as a key advisor to either the Treasury or Defense Department under the Trump administration carries implications that merit deeper exploration, particularly in the context of U.S. China relations. While many reports focus on Bass's financial background and his critical stance on China, several important nuances often go overlooked. Here are some significant aspects that could impact interpretations of his potential role and the broader geopolitical landscape. 1. Investment philosophy and market impact. Kyle Bass is recognized for his hedge fund strategies that often involve shorting overvalued stocks, particularly those linked to the Chinese economy. His investment philosophy is not just about profit, it reflects a distinct narrative about the perceived fragility of China's economic system. This perspective could influence U.S. policy, as Bass may advocate for measures that limit U.S. capital flowing into China, which he views as risky. The significance of this lies in the potential market reactions. If the U.S. were to adopt a more aggressive stance that restricts investments in China, it could lead to significant volatility in global markets. Many U.S. companies rely on Chinese markets for growth, and a sudden withdrawal or limitation on investments could have cascading effects not only on U.S. companies but also on global supply chains and economic stability. 2. Geopolitical rhetoric and public perception. Bass has been vocal about his views on China's economic practices, often framing them within a narrative of national security. His rhetoric may resonate with certain political factions that advocate for a tougher stance on China. This could lead to a shift in public perception regarding U.S.-China relations, framing them more in terms of conflict rather than cooperation. The implications of this shift are profound. If public sentiment turns increasingly anti-China, it could embolden policymakers to adopt more aggressive strategies that might not only affect trade but also diplomatic relations. This transition could lead to a long-term realignment of U.S. foreign policy, prioritizing confrontation over collaboration. 3. Technological competition and economic decoupling. Bass's appointment could also signify an endorsement of a broader strategy of economic decoupling from China. Given the context of U.S.-China tensions, particularly in technology sectors like AI, telecommunications, and semiconductors, Bass's influence might push for policies that further distance the U.S. from reliance on Chinese technology. The significance of this potential decoupling is twofold. First, it could accelerate the fragmentation of global supply chains, as companies might be forced to choose sides between U.S. and Chinese technological ecosystems. Second, it could stifle innovation and increase costs for consumers if companies face higher barriers to entry in both markets. 4. Increased military collaboration and defense spending. If Bass's influence extends into defense policy, his views could shape military spending in collaboration with allies in the Indo-Pacific region. His advocacy for a more assertive military posture against China could lead to increased defense budgets and a stronger emphasis on military readiness. This is significant because it not only impacts U.S. fiscal policy but also alters the security dynamics in the region. Increased military presence could provoke escalatory measures from China, further straining relations. Additionally, it might compel neighboring countries to choose sides, impacting regional alliances and stability. 5. Economic nationalism and domestic policy implications. Bass's appointment might also align with a broader trend of economic nationalism within the U.S. This could manifest in policies that prioritize American industries over global competition, reshaping domestic economic policy in ways that could lead to protectionism. The significance here cannot be overstated. A shift towards economic nationalism could impact trade agreements, immigration policies, and even workforce development initiatives. This could create a more insular economy, potentially undermining the global competitiveness of U.S. businesses in the long run. 6. Investor sentiment and capital flows. Kyle Bass's reputation as a hedge fund manager could influence investor sentiment regarding U.S. China relations. If he is perceived as a key advisor shaping U.S. policy, his views might sway investor confidence, leading to capital flow adjustments based on anticipated policy changes. This is particularly relevant in the context of global markets where investor sentiment can drive rapid changes in capital allocation. A more aggressive stance toward China could lead to increased capital outflow from U.S. investments in Chinese markets, which could further destabilize the region and impact global economic ties. 7. Long-term strategic implications. The overarching narrative of U.S.-China relations is one of strategic competition. And Bass's potential role could underscore a long-term shift in how the U.S. engages with China. His appointment could signal a commitment to viewing China not just as a trading partner but as a strategic adversary. This shift in perspective is significant because it sets the stage for a new era of international relations characterized by rivalry rather than cooperation. Such a paradigm shift could influence not just economic policies but also diplomatic relations, military strategies, and international alliances. Conclusion. The consideration of Kyle Bass for a key advisory role in the Trump administration reflects deeper currents in U.S.-China relations that extend beyond traditional economic discussions. The nuances surrounding his potential appointment, ranging from market impacts, public perception, and geopolitical dynamics to implications for domestic policy, are critical for understanding the broader implications for both U.S. and global economic stability. As the situation evolves, these factors will likely play a significant role in shaping the future of U.S.-China relations and the global economic landscape. 1. Kyle Bass's investment philosophy and critique of China. Kyle Bass is known for his investment strategies that often involve shorting overvalued stocks, particularly in the Chinese market. His outspoken criticism of China's economic practices, including issues related to transparency and regulatory frameworks, positions him as a controversial figure. Understanding Bass's perspective is crucial as it reflects a broader distrust of China's economic model, which could influence U.S. policies if he is appointed. His previous bets against the Chinese economy indicate a willingness to take significant risks based on his beliefs, potentially shaping a more adversarial U.S. stance toward China. 2. Implications for U.S. economic policy. The potential appointment of Bass suggests a shift toward a more aggressive economic policy against China, likely focusing on limiting U.S. investments in Chinese companies and addressing perceived economic threats. This pivot aligns with a growing bipartisan consensus in the U.S. regarding the need to confront China's economic practices, which many view as unfair. The implications for U.S. economic policy could be profound, impacting trade relations, investment flows, and the operational landscape for American businesses in China. 3. Geopolitical ramifications and diplomatic concerns. The discussions around Bass's appointment come at a time of heightened U.S.-China tensions characterized by trade disputes and military posturing. While some may argue that a more assertive U.S. policy could deter China from aggressive actions, others caution that such a confrontational approach could damage diplomatic relations and provoke retaliatory measures from China. The potential for economic decoupling raises concerns about global market stability and the long-term consequences for U.S. businesses that rely on Chinese markets. For public and market reactions, the mixed reactions to Bass's potential advisory role highlight a divide in public opinion and investor sentiment regarding U.S.-China relations. Supporters may view his appointment as a necessary step toward protecting U.S. interests, while critics fear that increased tensions could lead to negative ramifications for global economic stability. Understanding these reactions provides insight into the broader implications of U.S. foreign policy decisions and the potential volatility in financial markets stemming from changes in U.S.-China relations. 1. The appointment of Paul Volcker as chair of the Federal Reserve 1979. Paul Volcker was appointed as the chairman of the Federal Reserve in 1979 during a time of severe economic turmoil characterized by high inflation and stagnant economic growth known as stagflation. His appointment marked a significant shift in U.S. monetary policy. Volcker aggressively raised interest rates to combat inflation, which had profound implications for both the U.S. economy and its relations with foreign trading partners. The policy led to a recession in the early 1980s but ultimately stabilized the economy and restored confidence in the U.S. dollar. This period highlighted the importance of monetary policy in shaping international economic relations and the potential backlash from other nations affected by U.S. economic decisions. 2. Henry Kissinger's role in opening relations with China 1971 to 1979. Henry Kissinger, serving as National Security Advisor and later Secretary of State under President Nixon, played a pivotal role in re-establishing diplomatic relations between the United States and the People's Republic of China. His secret trip to China in 1971 set the stage for Nixon's visit in 1972 and the subsequent normalization of relations. This strategic shift towards engagement with China had far-reaching implications, altering the geopolitical landscape and impacting global trade dynamics. The engagement policy contrasted sharply with earlier containment strategies and demonstrated how high-level appointments and decisions could foster significant changes in U.S. China relations. 3. The appointment of Robert Lighthizer as U.S. Trade Representative 2017. Robert Lighthizer was appointed as U.S. Trade Representative by President Trump in 2017 during a period marked by rising tensions between the U.S. and China over trade practices. Lighthizer, known for his hardline stance on trade, was instrumental in initiating the trade war with China, imposing tariffs on a wide range of Chinese goods and advocating for structural changes to China's trade policies. His tenure underscored the critical role that trade representatives play in shaping foreign economic relations and highlighted the potential repercussions of aggressive trade policies on bilateral relations and global markets. The trade conflict initiated under Lighthizer's leadership continues to influence U.S.-China relations today. The potential appointment of hedge fund veteran Kyle Bass as a key advisor in the Trump administration's Treasury or Defense Department could have significant implications for U.S.-China relations. As we look toward the future, several predictions can be made based on the current geopolitical landscape and economic realities. 1. Increased economic confrontation with China. If Bass is appointed, the U.S. is likely to adopt a more confrontational economic stance towards China. Bass's history of shorting Chinese stocks and his vocal criticism of Chinese economic practices suggest that he would advocate for aggressive policies aimed at curtailing U.S. investments in Chinese firms. This could manifest in stricter regulations and sanctions, further straining the already tense economic relationship between the two countries. 2. Potential for escalating trade wars. The existing trade tensions could escalate into more pronounced trade wars. With Bass's influence, the administration might push for tariffs on a wider array of Chinese goods and services justified by national security concerns. This could lead to retaliatory measures from China affecting global supply chains and potentially leading to broader economic consequences. 3. Shifts in global investment patterns. As U.S. policies shift to restrict investments in China, global investors might start reallocating their portfolios. This realignment could benefit other emerging markets or countries that are perceived as more stable and transparent compared to China. Countries in Southeast Asia, India, and even some regions in Africa could see an influx of investment as U.S. firms look for alternatives to Chinese markets. 4. Impact on global markets. The financial markets could react negatively to a more aggressive U.S. stance against China, particularly if it leads to increased volatility. Investors may become wary of stocks with significant exposure to China, leading to a broader market correction. If the tensions escalate into military confrontations, the global economy could face severe disruptions, impacting not just the U.S. and China but also their trading partners worldwide. 5. Geopolitical realignments. Bass's appointment could signal a realignment in global geopolitical alliances. Countries that are historically aligned with the U.S. might be compelled to take sides in a more polarized world. This could lead to a strengthened coalition of nations opposing China, while China may seek to bolster its relationships with countries that are wary of U.S. hegemony such as Russia and Iran. 6. Technological decoupling. Under BASE's guidance, the U.S. may pursue a more aggressive strategy to decouple technological ties with China. This could include banning Chinese tech firms from U.S. markets, further limiting U.S. access to Chinese technology, and pushing for the development of domestic alternatives. Such decoupling could have lasting effects on innovation and technological progress in both nations. 7. Increased military presence in Asia. A more hawkish approach towards China could result in an increased U.S. military presence in Asia, particularly in the South China Sea and Taiwan Strait. This military posture would likely be justified as a necessary measure to protect U.S. interests and allies in the region. This increased military tension could lead to miscalculations and unintended confrontations. 8. Public sentiment and domestic politics. As the U.S. government takes a harder line on China, public sentiment may shift. National security concerns may galvanize support for tougher policies, but there may also be backlash from businesses affected by trade restrictions. The administration will need to balance these competing interests. And domestic politics could increasingly play a role in shaping foreign policy. 9. Long-term economic consequences. If the U.S. continues down a path of confrontation, the long-term economic consequences could be significant. A prolonged trade war could lead to higher consumer prices, reduced economic growth, and potential job losses in sectors heavily reliant on Chinese manufacturing. Moreover, the risk of a fragmented global economy could hinder international trade and investment flows. 10. Potential for diplomatic engagements. Despite the likelihood of increased tensions, there remains the possibility for diplomatic engagements. If BASE's appointment leads to a clearer U.S. stance, it could also open the door for negotiations to address key issues such as intellectual property theft and trade imbalances. The effectiveness of such diplomatic efforts would depend on the willingness of both nations to find common ground. Conclusion. In summary, BASE's potential advisory role in the Trump administration could herald a new era of U.S.-China relations characterized by increased confrontation, economic decoupling, and geopolitical realignments. While the immediate future may hold challenges and uncertainties, the long-term implications of these developments will shape global dynamics for years to come. How the administration navigates this complex landscape will be crucial in determining the trajectory of U.S.-China relations and global stability.